Welcome to Crux Investor. We caught up today with John Miniotis, who's the CEO of Abra Silver Resource. We spoke to them at the beginning of December and get an update as to what they've been doing since. Then we talk about Argentina. We talk about updated PEA and resource numbers expected in July of this year and what they've been up to. Drill results are anything to go by. They've been busy and the grades are good too, folks. So if you want our thoughts and opinions on the conversation, the company, what they've been up to, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There's commentary from experts from around the world on a variety of companies and commodities, including precious metals. We've got training courses on there to help you with your diligence process. We've done summaries of all of our interviews to save you some time because we know you're busy people. But most importantly, we've got a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from judgment, trolling and abuse. And if that sounds nice to you, and I think it should, go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, it'd be appreciated. Leave your thoughts below, we get back to everyone. And if you want to see precisely what we talked about today with John, take a look in the description below. Gentlemen, how are you both?
Doing very well. Thanks, man.
Been a while. Seen a few sensational headlines coming out in these press releases of yours. It was about time we had a chat. Been busy.
Agree. No, thanks very much for having us back. I mean, it's definitely been a very busy past few months since we last spoke. So yeah, an update's in order.
I'm looking forward to it. So Dave, I know you're down on the ground on the Salta. How are things down there in Argentina?
Things in Argentina are fine, except that it's very hard to get in or out of the country. That's a little bit of a problem when it comes to inviting people to look at the project. But since we're actually in Salta, there's no problem getting up and down to the mine. Beautiful.
Where in the world are you hiding, John?
I'm in the sunshine state of Florida, so going to be staying here for the next few months.
Excellent. How was spring break?
Oh, I wasn't. Yeah, not here for spring break. Yeah, no, things are fine. I mean, things are well, obviously.
Good. Okay, in all seriousness, but we better talk mining. I think we know a bit more about that. John, I'm going to point at you. There'll probably be questions which are, best answered by Dave, but I'll address you. You can point them back to Dave when you think that's appropriate. Okay. So first of all, I tell you what, give us that 1 minute overview of the business for people new to this story, and I'll pick it up with some questions from there.
Sounds great. Yeah. So in terms of an overview, Abra Silver is a very well-funded silver gold focused exploration project company. Our flagship project, of course, is Diablillos. It already has a large resource base with over 140 million ounces of silver equivalent, which is open pittable, located close to surface. And that resource seems to be growing very rapidly here as our exploration program has been firing on all cylinders, I'd say. So the company had a transformational year last year in 2020. And this year is already shaping up to potentially be even more exciting for us. So already this year, as you mentioned there, Matt, I mean, we've announced a number of very high-grade drill results over excellent widths. And so I think it's safe to say that the drill program continues to far exceed all expectations. So things are definitely going very, very well for us. And, importantly, looking forward, I mean, we continue to have a number of drill results in the pipeline, which we expect to announce shortly. So over the coming weeks and months ahead. And of course, we're continuing to drill at site as well. So we expect to have a high level of news flow really for the remainder of the year. And while all the drilling's going on, we're about to embark on our phase 2 drill program here shortly. We're also working behind the scenes on an updated resource estimate, which will incorporate all of the drilling for the last 15 months. And that'll lead to an updated PA study, which will finally reflect the updated economics of the project. So definitely a very busy year ahead and a number of very important milestones, I'd say, on the horizon.
Okay, well, look, I do want to talk about the updated PEA and therefore the resource estimate, the updated PEA resource estimate too. You've done a lot of drilling. They're good grades. You've got to be happy. I mean, that seemed to be the whole purpose of 2020. Just get drilling, see what you had. And then sort of sit back and work out how you proceed in 2021. So 2020, you'd look back and go, mission accomplished, would you?
I'd say so. Yeah, absolutely. Yeah, no. So I'd say, yeah, we're consistently, as you mentioned, just coming up with big drill results from our drill program. I'll let Dave talk about sort of the details, but just from a high level, I mean, what excites me the most for sure, and why I'd say mission accomplished is we're consistently hitting high grades over excellent widths, close to surface in multiple different zones across the deposit. So, you know, the initial focus was to better define the deeper gold zone in oxides. And so, you know, that was the gold zone that sits at the base of the proposed pit shell. And as we explored that, came out with several very high grade results, which was great from that zone. But we also intersected some high grade gold and silver hits close to surface in what was previously classified as waste. And so that's very important as well. I mean, that opened up what we would call the shallow gold zone, which became another priority target for us. We've now drilled that out further and waiting back for some of the final results there. But all the holes we've seen back to date, you know, have given us a lot of confidence. Certainly, we expect you know, in the new upcoming study, we'll classify zones that were previously classified as waste will now be economic mineralization, both gold and silver. So yeah, lots going on. And then the northeast zone, of course. I mean, we've just recently announced some step out holes 200 meters away in the northeast zone outside of the existing resource. And so, you know, very encouraging, again, several high grade zones. And so we'll be following up that as well. So potential to expand the pit to the northeast, potential, mission accomplished, I'd say, expanding the higher grade mineralization up depth and shallow as well. So we're hitting high grades. You know, all over the place, and Dave and his team, all credit goes to them. I mean, doing a heck of a job for us.
So just tell us, like, with regards to the shallow gold zone, I mean, you're not after shallow gold, you're after what's underneath it, but it's going to, as a byproduct, that's going to what? Save costs, save costs? I mean, how do you look at it?
Yeah, so as part of the PEA study that was completed back in 2018, the CapEx, the total capital cost of the project was $300 million. Which is manageable, of course, but you know, 100 million of that, so 1/3 of capex, was on pre-stripping. So you're literally removing waste for the first 18 months to get to the ore body, and that still, even incorporating that $100 million of waste removal, you still get very good economics. But now within that waste, what we're defining is very good grades of gold and silver mineralization above resource grade. And so that pays for itself. I mean, this is within waste material that was going to need to be removed anyways. But now, I mean, if you're getting 1, 2, 3 grams of gold within that waste, you know, that capitalized pre-strip of $100 million could easily pay for itself. So if you define 50,000 ounces of gold at, say, $2,000 gold, I mean, that's $100 million of revenue from material that was previously classified as waste, which will now be economic. And then you get to the juicier stuff once you hit the ore body in the Oculto zone.
Right. Okay. I'm sort of intrigued by the process here because you keep putting out these high grade results, and you're going to an updated PEA, and you know which is great because I think you're slightly suffering from the numbers from the old PEA. So you've given us a clue there. You probably removed $100 million worth of cost from the old PEA numbers. So give us a sense of what you're trying to achieve with this updated PEA. Can you give us more insight as to, you know, how you are moving things forward in terms of not just increasing the resource with the drilling, but in terms of saving potential costs about the way that you come at the project?
Yeah, no. So I think that's an excellent question. Very important to make that distinction. So, you know, in the 2018 PEA study, which was so far the most recent study that was, published, that used, first off, I mean, very conservative commodity prices to what we have today. So the base case assumption was $20 silver, $1,300 gold. And as we mentioned, we had a $300 million capex, 100 million of which was on pre-stripping, and the existing resource, so 140 million ounces of silver equivalent. And so factoring all that in, the project still had very good economic returns. So 30% IRR after tax, which, you know, translates to like $330 million Canadian. So on a per share basis for us, that'd be 80 cents per share. So we're still trading below the value. If you assume we didn't find any more mineralization, assume that was the resource, rather than just the first stage of the resource. So based on that resource, based on $20 silver, $1,300 gold, which is very conservative, clearly, we're still trading at a fraction of the value based on that old, now outdated PA study. But when you factor in all the drilling we've incorporated, I mean, it should be pretty clear here. We expect quite a significant, increase in the gold resources, also likely in the silver resources as well. We expect things like what was previously classified as waste now to turn into mineralization. That will help out. Potential improvements on the recoveries. Dave can talk about all the metallurgical test work that we're doing. So when you factor in the upcoming resource estimate, which we'll expect to announce around July here, and all these other various factors and apply current commodity prices, I mean, there's a massive disconnect right now between where we're trading and what the value of this project is. And so, I think that will hopefully,
why do you say that? Why do you say that? The market is usually right, isn't it?
In some cases, yeah, it is. But certainly, I mean, if you piece together all the information that we've announced, it's clearly not reflecting. I mean, it's still, like we mentioned, just trading at a fraction of the value of the old PA study. But yeah, 15 months worth of drilling, all these high grade hits, like we mentioned, in different gold zones, that's clearly not being reflected. I mean, if you look at, there's a slide in our presentation, which people should look at, but if you only change commodity prices, so because we have 140 million ounces silver equivalent, I mean, we have, a pretty sizable project. The torque of just changing commodity prices alone takes this from a $300 million project to, I think it's a $700 million project using, close to current spot prices. And so we're trading with a market cap of 200 million plus factor on all the drill results. I mean, this project could easily be well north of $1 billion NPV, and we're trading at 200 million. So or 240. I mean, it's clear that the market's kind of not factoring in all the information. And so our job is obviously to deliver on that, come out with the updated resource, come out with the updated PA study, and, put it on paper. This is what the value of the project is, and then make sure that the market clearly understands the value here.
But talk to me about the Argentine discount then, because clearly something is amiss, you feel, with regards to your valuation. Is it just entirely laid at the door of people not being comfortable with companies operating in Argentina?
So I'd say that certainly plays a factor for sure. And I think we probably touched on that last interview as well. But what's important is that we're in the Salta province of Argentina. So we're in the Nevada of Argentina. I mean, when you look at the Fraser Institute of rankings, the annual survey they come out with, Salta province was ranked number 1 in all jurisdictions across Latin America. So for the first time ever, it was ranked higher than Chile. Of course, it was ranked higher than Peru, higher than Mexico, other mining jurisdictions. And so Salta is a very pro-mining province. We have excellent relationships there. That's obviously where Dave lives. And so, excellent relationships there. Of course, I mean, the proof is in the pudding. I mean, if we were the only company advancing a project in Salta, there'd be a big unknown. The fact that Fortuna Silver has completed construction of Lindero, they received their permits in less than 2 years, I believe. They have their stability agreement in place, profitably operating that project, and a multi-billion-dollar company now. That's their flagship asset. It just goes to show that projects that are highly economic in Salta, there's no issue with developing those. So for us, I think it's kind of educating North American investor. I mean, for sure, there are risks in Argentina, just like there are risks in Chile and Mexico and even North America now, Canada and US, definitely no exception. So there's risks everywhere. I mean, it's a risky business. It's junior exploration. So yeah, clearly not for the faint of heart, but overall, I'd say, the market probably doesn't fully understand sort of that if you're in Salta, it's a night and day difference from being in Chubut or Mendoza or some other provinces where it's, completely different prospects of actually advancing projects. So we're in the Nevada of Argentina. We're exactly where you would want to be anywhere in Latin America, I'd say.
Okay, so if it's not 100% at the door of the Argentine factor, and it's as simple as a case as, well, just maybe use a different spot price on the last set of PEAs, and you can get to quite a big number, but people aren't doing that. So what are the other factors that you think that people are attributing to you negatively, which perhaps need addressing by you as the company?
Yeah, I mean, so look, to put things in perspective, I mean, the share price was up 750% last year. So it's not like, we're floundering here and nobody's paying any attention whatsoever. But I think what's important to note is that even though we're up 750%, we went from, 5-6 cents to now 55 cents in pretty short order, like the last 15 months here since we've been involved. What's important to understand is the value of the project during that time has far surpassed, again, the value of the share price. So we're still trading at a $200 million market cap, even though the project, value is multiples of that. And so the share price is catching up, but, and as silver prices rise, gold prices rise, the value of the project is just rising at a faster rate than our share price. So we can't complain too much about the share price. Obviously, we've done well. But as the value is crystallized and we prove out what the PEA study is and the updated resource is and come out with additional information, we market that and just make sure everybody understands this project is a unique project without question. It's a tier 1 project with lowest cash quartile. I mean, the cash costs in the previous study were $750 an ounce. So it's in the lowest quartile already. Clearly having higher grades is only going to help that. So it's a pretty unique project. And I think, we're getting zero value for the exploration upside we've delivered here over the last 15 months, plus what's yet to come. And Dave can walk you through sort of the plan going forward.
Well, maybe now is the time for Dave to talk about some of the things that you can control. I'm interested, you mentioned metallurgy there, but also this is the first, go at trying to understand the economics. I'm keen to understand what you're doing with regards to water, energy, infrastructure, and so forth. So Dave, maybe it is over to you. What have you been up to?
We have almost completed the first phase of drilling. Now, the first phase of drilling was going to be 13,000 meters. We've actually sneaked up to 15,000 meters because in the last, in a few of the more recent holes, we got some pretty spectacular silver intercepts, and we understand why they are there. They are at the intersection of very well mineralized breccia zones, and where those intersect, you get a higher grade and thickness of mineralization. So we've expanded the program by another 5 holes to try and define the high grade silver resource within the resource itself, and then we're going to take the rigs off of Oculto, so that we don't keep on drilling and we've got to draw a line in the sand somewhere and come up with the resource estimate. So on the basis of that, we're going to have the resource estimate. We are about to select an independent arbiter to sign off on the resource, although we're carrying out a lot of the resource estimation internally. A part of that study, to talk about the drilling will carry on at the same rate, but the rigs will be moved on to other targets within the claim block. And we have some previous drill holes from quite some time ago that intersected shallow, high-grade gold mineralization, and we want to try and develop resources around those within truckable distance to Oculto, where the main resource is going to be. And parallel studies, as you just mentioned, we've employed an expert metallurgist. We've collected 65 samples for additional metallurgical test work above and beyond the 80 samples that were already tested previously for the 2018 study. And we're fairly confident that we're going to increase or improve both the gold and silver recoveries based on a bit of the test work that's been done already internally. Before we amalgamated the 2 companies, Aton Minerals and Abra Plata, before the amalgamation, we decided to do a bit of a test work on the metallurgy. We submitted 8 samples for testing, and they came back with results higher than, recoveries greater than the percentages used in the 43101 2018 study. 8 samples is not much, but we've very carefully selected another 65 samples to represent the various zones of mineralization within the system. And this will be a very comprehensive metallurgical testing program, which will be an important part of the new PEA study. We've also sent out invitations for various independent companies to make proposals on studies on energy and water. We're quite well advanced in getting an adequate amount of water for the project. We need about 6,000 tons a day of water to operate the project. We have about half of that in holes that were drilled in 2007, and we have another 5 holes planned and probably more to try and double that to get to the 6,000 tons a day that would be required. And we're in the process of getting that permitted. In other words, getting easements over the paths of the pipeline and the sites of the wells that would be drilled. So the water and the energy and the infrastructure and the metallurgy will come together with the new resource estimate for this updated PEA study.
Okay, so I'm going to come back to John very quick. Thank you for that, because I'm intrigued about the process. It sounds obviously a very robust process, and you expect to see the fruits of your labour sometime in July. John, remind me again, what's the game plan here with this? You get the PEA updated. People will look at the new set of economics, and you've had a fantastic run last year. I mean, really well done on that. And like this year, as you say, the drilling just keeps hitting and giving. But you've got to kind of stop and reassess about how the business moves forward. When you step away, do you think anyone is going to look at an Argentine asset and go, do you know what? I quite like the look of that. I'm going to make that part of my portfolio. Or are you guys going to have to go all the way yourselves?
Yeah, no. So I'd say the game plan it's actually very simple. So it probably sounds a bit cliche, but it's absolutely true. I mean, at the end of the day here, I mean, we're in this to make money for shareholders, period. I mean, full stop. So, of course, we're shareholders ourselves. And so that's what drives our decision-making process here. So at this stage where we're at, without question, I mean, the best path to unlock value is to continue to explore the multiple targets we have across the property, continue to grow the resource, come out with updated studies so investors can finally appreciate the value of the project we have here. And then at the right time, I mean, as we advance the project, obviously Dave just mentioned all the various activities that are going on behind the scenes, but, we test out these targets, ultimately down the road, deliver a feasibility study here, which will be the next milestone after the PEA study. Down the road in maybe about 24 months time or so, we'll need to make a construction decision. And so, as that gets closer, I mean, we'll closely evaluate all our options closely. So whether that's attracting a proven construction team ourselves that can help us build this out ourselves, we think, that's one avenue worth exploring. Do we partner up with a corporate? Do we sell this project, the company outright for full value? We'll seriously, obviously, consider all those options in detail at that time. But for where we're at right now, to steal a line from Jay Powell, I mean, we're not even thinking about selling the company at this stage at this valuation. I mean, we're significantly undervalued. We know what we have is very unique. It's very special. I mean, we've all heard all the stats. It's 1 in 3,000 exploration properties or something like that ultimately become a mine. I think what we have here, without question, will become a mine, will become a very profitable one, at that, a tier 1 asset in the lowest cash quartile. So what we have is unique, and we're going to advance it, unlock as much value as possible, and see where that road takes us.
I think it's worthwhile mentioning as well that since we've got $18 million in the bank, we have enough money. We don't need to do any more financings to take this thing through to decision to mine.
Yeah, that's important. We're fully funded to a construction decision with the cash we have. So we're fully funded for the next 2 years. There's no reason why we can't continue to unlock value here. So our game plan is execute. That's it. I mean, it's pretty easy.
It's pretty easy if you're executing into a positive precious metal market where the prices are right. Okay, that's when it's really easy, and you've got to take a view as a CEO and board as to what the market's going to look like going forward. So I guess after you've got the PEA done, you will be continually putting your head up and looking around and seeing what the landscape looks like. Shouldn't you?
Yeah, no, so I agree with that statement for sure. And I'd say one of the benefits of having a low cost project like this, what we have with high grades, close to surface, open pittable, you're dealing with cash costs in the lowest quartile of the cost curve. So this is based under the existing PA study, which is yet to be updated. Cash costs were $7.50 an ounce on a silver equivalent basis. So, whether right now we're at $25 an ounce plus, it's incredible margins. And so, as that increases, there's incredible leverage here. So I think it's for every dollar the silver price increases, the value of this project increased by 30 million. And then for every $100 the gold price increases, it increased by another 30 million. So as gold and silver prices rise, the value of this project grow exponentially. And again, that's why our valuation, silver and gold prices have risen quite significantly over the last year. And so again, that's probably not fully reflected in our valuation at this stage. But this is a project that's economic at much lower commodity price than we have today, but certainly one that provides exceptional upside exposure to rising commodity price environment. And so this is an asset that's going to be in extremely high demand. You look at the outlook, there are very, very few primary silver projects, 100% precious metals. So silver and gold without any base metal exposure here that are, within 2 years of, say, a construction decision. So what we have is rare. It's going to be hard for anyone to define something of this, this advanced with these types of grades. And so that's why we know what we have is unique. We're holding on to it and advancing it as quickly as we possibly can.
I think it's worthwhile emphasizing that we're talking about oxide mineralization as well. It's oxide silver and oxide gold, and therefore it's a cheap process. It's cyanide leachable, and whereas other silver projects are polymetallic with silver as one of the products, it's a much more expensive way of getting the silver out of the ground.
No, fair point, well made. John, what would you say to people who, according to you, don't understand or get this project, which leads to you being undervalued? Argentine factor aside, what do people need to be looking at?
Yeah, so I'd say look at all the drill results. You don't have to take our word for it, right? We've delivered here and we continue to deliver. And so it doesn't require a huge leap of faith. It's not me and Dave saying that we're going to deliver some high grade results. Look at the press releases from the last 15 months. Look at, each press release. We actually have cross sections of practically every drill hole. So if you have the software and you have the knowledge, you can put together a conceptual geological model yourselves. All the information's out there. And so obviously we've updated our internal model. We think we know what, the size of this project is. And again, importantly, it's not just the size. It's not low margin ounces that we're adding here. These are, increasing the grades as well as the size, as well as the tons, as well as the recoveries. And so we're seeing, positive surprises across the board. But just look at the results we've delivered and factor that into the OPA and see what you think this project is worth, and then compare that to our share price. So don't even assume any further upside, but we're just starting on the phase 2 exploration upside. So Dave and his team now are going to come out with an updated 10,000 meter drill program, testing the zone to the northeast, testing a zone known as the Northern Arc 4 kilometers away. If we deliver on some of these step out holes, then again, that's a game changer from what we currently have. But there's no need to even be optimistic. Just look at the results, and then as we come out with the updated resource, the updated PA, that's going to incorporate all of the information, I'd say, up to now.
Okay, fantastic. Look, guys, appreciate the update, and like I say, I'll point people back to the interview in December for all the kind of historical and team news there. But I'm looking forward to the resource update. I'm looking forward to the PA and see what you've done there, and let's see what that actually does in terms of market appreciation for how they value you. Stay in touch, guys, and we'll speak soon.
Thanks very much.
Thank you.
Take care.